Good morning. This is the Elliott Wave weekly update for the Dow Jones 30 being recorded on Sunday, June the 15th at 6:50 a.m. Pacific Daylight Time. I'm going to start here on the cash market and I'm on the 5-year weekly chart. And just to kind of recap where we are, and we are from this chart, we can see that we are still within an intermediate fifth wave up. And within that, we're in minor 5 up. And within that, we're in minute wave 5 up. So we're in minute wave 5, of minor wave 5, of intermediate wave 5, of primary wave 5, of cycle wave 3. So in essence, we're very close. We're very close to reaching the high of a cycle third wave. And I'll just flash quickly out to that maximum monthly chart. And you can see we have 1, 2, 1, 2, 1, 2, and then we're in that primary 5, within that cycle 5, within that minor 5, within that minute wave 5. So they all get clustered up together because of time. So again, now what that does suggest is that the cycle wave 4, that correction, it would be the box. This is where we would expect it to come, as Elliott has taught us, and I continue to follow, that a fourth wave in progress will usually find its terminus within the price territory of the fourth wave of one lesser degree, since we'll be counting a cycle degree fourth wave down. The previous fourth wave is the primary degree, and that is right here. So we have that potential that the market could drop down to the 2009 lows to finish that cycle fourth wave. What comes after that is another cycle fifth wave. So what it does seem that can happen is that the market will, or what will be correcting is the rallies. And again, it just really takes us back to when the spigot was opened to print money, to add to the deficit, to build on it. I mean, this was the great financial collapse. So a lot of things went down, a lot of things went under, and to rebuild and to restart and to just regain ground, money had to come about. And then we had the pandemic in 2000. That did a lot of damage, but to not so much on a corporate level, but on a personal level. And being that the pandemic itself forced the globe to stay home, not to go out. And so what had happened then? Well, we had to inject a lot of capital so that people could continue to have a life, continue to pay their mortgages, their rents, etc. And so that pushed up the deficit even more. And then again, we had we had to go from low interest rates, we had to start raising the rates, and then that kind of squeezed a lot. Everything that has happened will need to be corrected. Let me just put it that way. And it's not necessarily a bad thing, although it could, like this, produce a depression. Not sure. I think that the market is basically just going to correct all the way down to primary wave 4. And can't tell you exactly what is going to produce that and what's going to be the stimulus, what's going to be the enzyme that's going to drive the market just to kind of drop. We have many things that we can choose from, the greatest of which is, of course, the deficit, the United States deficit. And that continues to grow. And so currently, if this particular budget or big beautiful bill actually does pass, it will contribute. I think it's up to $4 trillion more over the next X amount of years to the national debt. And so at some point, we have to remember, we have to believe that it does break the back. It does. It's just, you know, we've already seen the United States go through a period where we're getting downgraded by the credit agencies, the entire credit system in the United States. The bonds are getting downgraded. It's like the U.S. has got a bad credit score. So think about it that way. And it's like, what happens when we have a bad credit score? When your credit isn't good enough to get the preferred interest rate. Well, the United States is getting into a position where they can no longer get that preferred interest rate to borrow money. So, simple process. Anyway, here we are in intermediate wave 5. So we can go all the way down. And we see we got 1, 2, 3, 4, 5 on the minor degree. We're in that minor 5. 1, 2, 3, 4. We're in that minute 5. Let's bring it down to the daily, and we can see the progress here inside. And as with all the markets, I have readjusted. What we're doing in this finishing minute wave 5 is that it started with a diagonal. Maybe not so in the Dow, but I'm leaving it as such. It could be 1, 2, 3, 4, 5, 1, 2, 1, 2, 3, 4, 5, 3, which is kind of weird, but it all fits. Or I could just push it up a little higher. And then we have 1, 2, or actually from here I could put that 3, 4, and then 1, 2, 3, 4, 5, finish 5. So there is minuet wave 1. And now we're still in that minuet second wave. And what this, of course, will encompass is, I believe that we still need a finish the C wave down. And this was all as Israel began to bomb, have military strikes in Iran, which are still happening. They're still tit for tat, kind of pushing back and forth. And so that's not over. So I think what the market needs is one more drop in a C wave down. Now, this is where it's going to get tricky because under this particular count, the minuet wave 2 cannot trade below the marker that's going to be 41,354. So 41,354 in the cash market. The Dow cannot drop below under this count. If it does, it's going to invalidate that this is a wave 2 against wave 1. So I have to back out. What could be my alternate view? Would be that, as I've said in the other markets, let me just pull this back out to the daily, that's 3, that's 4, and if that ends up being wave 5, remember 1, 2, 3, 4, and this counts as 5 up. I would put the 5 there, the minute 5 there, the minor 5 there, etc., all the way up, and the fifth wave, the minor fifth wave, ends in a failure. The minute fifth wave ends in a failure, where it failed to take out the high. And that is not good. That could really toss the cookies, so to speak. And the market would just actually go pretty severe as it starts a much larger correction. So is it possible? Yeah, it is. I can't say it's not, but I'm going to give the benefit of the doubt that the Middle East will calm down. Things will begin to revert back. In these markets, we still have next Wednesday being the Fed giving their decision. I do not think that the market's actually expecting anything. I think we're still expecting things to be left unchanged. And so the current target remains 4.5, 4.75 for Fed funds. And we're trading to the top edge of that. Now, so we'll see what happens there. But then also we have the June expiration next Friday, June the 20th. And as we know, and as I speak about through memberships, that there is a lot of gamma a lot of gamma that's going to be expiring. And whether it expires in the money or out of the money, it's still going to expire. And that's going to be a pretty large release. And so from there, we could get that pop in volatility. We could get a pop in the market or additional decline in the market. In this case, I think it would be a pop. So right now, there are a lot of gamma levels in the SPX that could hold the market down and until we can get through this expiration. If we happen to come down quickly, again, bringing this into play, if we come down quickly, nope, I wanted the hourly. And we come down to this level, 41,730 or thereabouts. So again, if I'm just looking in here, this could be 1, 2, 3, that's the 4. And then we come back down in a wave 5 and finish this wave 2. And then it should launch higher. And I mean launch. I would think that that's not a bad statement. It would be starting a minuet third wave. Remember, third waves, longest, strongest, they just kind of go. And I'm not sure how or what would start that, but I think just the pull could, just the fact that there's enough bringing that down, and when it stops, the pull to start buying will come back in. But we'll see. Again, not thinking it can't break there. It changes the dynamic. It changes the count. So we're going to look for that. And once that's done, let me just pull this open just a little bit back into that daily. We still have, once I can get the wave 2 in, then I'll run fibs 1 to 2 to get where this third wave can come in. And let's just say, let me drop this back down. Let's just say that we do get down to that level and it holds. So just to put what I would say are guesstimates, and we open this back up again, cut back on the daily. Here we have 43,482 for a third wave, pushing even higher. We could be up towards those new highs at 44,566. Above that, we start to get into where we need to be. Now, minute wave 5 still projects to an equality where minute wave 5 would be equal to minute wave 1 at 45,551. That's new highs. That's what keeps it alive, because just using Elliott and what the fibs suggest is that minute wave 1 was pretty large. We track it back out to the bottom of wave 4, and that would suggest 45,500, 550. Get it up there. And then we have higher levels above that to where? Now, what would sit underneath the market? Well, when you start getting up to new highs and the pressure to cover, to adjust, could drive it. That's the other. So what's going to be the driving force? Just the necessity that once we start heading into uncharted waters again, that the market needs to cover. So a lot of things could happen and be actually just really create a situation where you're like, why is the market doing that? And of course, there'll be like a lot of financial media talking about, oh, market's bullish, market's breaking out, market's doing this. It's like, there could be a reason that it's breaking out, and I don't think it's going to be economic. So here we have it. All right, so I'm going to go over and take a look at the YM, which pretty much is in the same, and that, but actually, my apologies. This is me early morning that I just need to readjust and readjust. So thought I got this done before I started, but obviously I did not. My apologies. Give me one quick second and just remove it, and I am going to reset it to take this off and this off. And now just put in fibs for downside. And we're going to add these. And so we have 618 down there, 4190. We have 786. So I can just reset this, put that in there. Oops. And this like this. Again, my apologies. That's what happens when I do this too early in the morning with only one cup of coffee. And then just reset my levels. Don't need these. I think it could actually come down. All right, what happened? Are they that far down? I guess so. Oh, the 100% is right there. That I can't do. So let me adjust this just a tad. That works. All right, so 618 it cannot do because that would break below that level. So we can remove that. And we have the 100%, which it can do. Get as close as it can. It just can't break it. So just to review that rule, let me just finish this. And I'm going to put in a drawing. And we're just going to put to see if we can get some up. There it goes. It does come in very clean. So just kind of setting that up for us on what the Dow can do. And readjusting these. Actually, can do that. Come on. So we're just going to leave those. I doubt it, but it could provide a little bit of support, and it actually could because it puts in a new low. And so as long as we get the 5, then we're sitting okay. So then again, wave 1, and here in the future, it does appear that it is a diagonal. And so I can just kind of put these together as such, which is a little bit different than the oh yeah. Yes, close that panel. Thank you. And let's try that again. I'm going to put from 2, 4. Aye. Here we go. Put it up to there. And then close that off and put my other trend line in. We're just going to put it right up to there. What is going on? Aye. This is like I'm putting it in there and it's not doing it. Put it right to, thank you. Okay. Thank you for indulging me on an early morning. All right, so we kind of get the diagonal. Diagonal happened in the futures market. For minuet wave 1 forms a diagonal. Minuet wave 2 still in progress, bringing it down. Take a quick look internally. We have 1, 2, 3, 4, strange as it is, and coming back down. I think it'd be 3, ABC 4. Yeah, that's how I'm gonna have to do that one. Because again, we came down to there, it held, and then we did a beautiful, what looks like a 5 up, and then it did 3 down, and then we rose back up and put in still a new little high. So this is going to be 3, ABC 4, and now we're counting 1, 2, 3, 4. Need one more. Bringing it back out to the hourly chart. We need one more. 42,009 comes into play, pulling it all the way in 100%. We're wave C. So if we do A, B, that have to be here, A, B, and then we're in the C wave, and it's that one that is probably almost done. So 42,009 can work in this case. If not, we come down to the 100%, which is 41,622. We put the wave C and the wave 2 down below that. And what it cannot do, it cannot break 41,232. That would be where wave 2 overlaps the starting point for wave 1, and therefore it's not a wave 2. So that would then bring this up, as I discussed previously, to a failure. And if that happens, my point is, it's like, should it occur, it's just not going to go down there and test it and break it by a little. It's going to go down and fall right through it. Whatever is happening here is just going to create another huge slide that could take it right through it. That would be, where we're coming down in 1, 2, 3, 4. And this is a larger fifth wave to start wave 1 of something. Because if it breaks that level, it's going to get ugly. That would be my take. Now, let's just kind of pull it back out to the daily and look at our moving averages, which actually are kind of, not looking all that great on the daily chart. We have a flat 200, a flat 78, and a flat 20. Still basically in alignment to go up. If we just take a look here, basically in alignment to go up, because they are still stacked. There's the 8, there's the 30, there's the 78, there's the 200. They are still in alignment to go up, but that would suggest that we stop, we get to there, we stop, and we go. Turn and go. Now, we'll see, because actually I think we got a little bit more to go, and it likely can come down a sizable chunk. And we'll have to wait and see. So I'm going to kind of finish it up there, and we'll see what happens here. Again, if wave 2 does not break below, and we finish it within this territory, then we can put in 1 to 2 and start filling in these blanks. Otherwise, these are the ones that are coming in 100% from minor 5 to equal minor wave 1 sits at 43,341, but this is more likely. But I think that will get taken out, but I think it should provide some resistance. And then we have 43,976. That's to the minute wave 5. Again, I think it just provides some resistance on the way up with to finish, and that this is the more likely. Those are the new highs. That's what we're looking for. This, as long as we start coming up in 5, minute wave 5 can be complete, but see, we're counting it here as well. So I'm going to get, as long as I get my 5 waves in, and then one completes this, completes all the way out. Does not necessarily mean that minor wave 5, once we get breaking above that, has to go to this level. It does not. Then it is all going to be down to the actual count, the internal count, which is why we continue to monitor all of the levels. And so I'll have additional, once wave 2 can be complete, and we have our markers, then I can add another internal levels for what we think this third wave can come to, and then we're going to track the 4 and then track the final 5th. All to come. All right. Again, next week, Wednesday, Fed. And then on Friday, large expiration for the June monthly. And then the 30th of June will also present its challenges, because that's the role for the large hedge fund from JP Morgan Chase that they put out, and they roll to September. Also, starting next week, very likely, because the June contract expires next Friday. So we're going to see the futures market roll from June to September. And that might even start. We might see like here on Thinkorswim. I think they come in tomorrow morning and it'd already be, they've already done the roll. Most of it goes, you have to consider that a lot of it has to be in terms of the futures market. And we're always going to be looking for the volume in September to be greater than the volume in June. And that could start tomorrow. So once it is, then you should make the roll, because to trade these gets a little bit sketchy. All right, that's it. Next update will be next week.